Hey, what's going on, guys? It's your boy MC Fire. We're coming at you again with another video. Fireside trades, fireside chats. We're definitely blasting you guys with some goodies. I'm happy. Hope you guys are happy. We're gonna do my favorite thing, which is get straight into the charts. Let's dive right in. So out the box, right? Got some. We were looking at some plays earlier, and I was like, man, this semiconductor company is as valuable or has been on the same trajectory or uptrend as kind of NVDA, which is wild when I think about it. Because I was thinking about, man, this has already pulled back. Should I get calls in this for the leap instead of Nvidia because it's already in a good position? Probably gonna wait for Nvidia, but it's just something to think about, right? There's not just the name brands out there. You can dive into some other pretty cool stuff. But before we get into that, we've got some really good news for you guys. So we're going to get into some of the other things like the Fed watch. We're going to go over what news is coming out, and we're going to see how the market's rotating over through this week. So out the gate, let's start with our handy dandy bar chart tool just to kind of see how the market's been pushing, rotating, all that good jazz. So what you're looking at is basically the different sectors of the S&P 500 to see, hey, what is actually in play, what is not in play. Not everything necessarily is in play. So we like to take a big umbrella view, narrow it down to its individual components, like the different sectors, and then from there, pick some of the best outperforming individual stocks in those sectors. We've developed a system for that, following our mentors, some of them from Simpler Trading, some of them from some other things that we have actually tapped into and learned, and we put it all together to a very simple system that incorporates, multiple different systems for multiple different trading strategies. I like looking at this because you can tell very clearly that, hey, the SPY is kind of trudging along, making slight gains, hitting all new highs. But what is outperforming SPY? Well, you see the green here is communication services. The red is info and tech, right? Primarily the XOK. And then the next up is financials. So all the other sectors are kind of below standard except for communication services and info and tech. But the time to get into them is kind of, if you notice, when they start outpacing, if they start outpacing the SPY, that's the time to look at them as a potential buy, not necessarily at all time highs. So the ones I would be looking to throw into the lineup would be like potentially financials. If it starts outdoing SPY, you want outperformers, right? Or because if you don't get outperformers, you might as well just buy the SPY, right? We are a proponent of that, and we really believed even from the beginning. If you look back all the way where the rally was, what was outperforming SPY at the time? So you could say out the gate you had comm services, right? You also had industrials, which was at a high, and then even then you had financials and tech just at markets. So at the birth of this thing pulling out as SPY started increasing and industrials started decreasing, you would probably be looking for something like info and tech and the communication services. It's on trend with SPY as it starts to increase, but it's beating SPY. That's even back here. So when you look at it, financials, tech, and communication services. Industrials, if you notice, was scaling out. So if you were in industrials already, the time to scale out would have been after you saw it pulling back and SPY is pushing. Now, if you look currently, right, the only two that are above SPY are the ones we stated previously: comm services, XLK with info and tech, and then financials is actually trying to make a bid to for people to scale into that sector. I'm assuming so. If it overtakes the SPY, that could be something to potentially look into. Doesn't mean that it's future performance, but if it has a trend of outperforming the S&P 500, that's something you want to look into. And this is really just a very simple chart. It's absolutely free. You can go up to www.barcharts.com to see that for yourself. Which sectors actually are better than the overall U.S. average, the SPY. Coming up on the calendar for Forex Factory, today is Tuesday. And so if we're looking ahead here, on Wednesday, Thursday, Friday. Not too much on the schedule for at least the US until Friday. Manufacturing PMI is basically just another data release. Really, we're not really interested in what the data releases are, yay or nay. We're more interested in how the market reacts to the data. So you can't necessarily take a trigger off the data release. So because you can't yay or nay the data release as a trigger, you're only really waiting on to see how the market reacts and how it integrates with your system to actually take a trade with that trigger. So it's good to know that it's coming up. Potentially on those days you could see increased volatility. That's not really until Friday. So business as usual as we roll through there. Went on and pulled up the CME Fed Watch tool only because we want you guys to at least be aware of it. If you're new to the channel, this is another one of those websites that gives you free information on something that's super, super important. That's the Fed fund rates. It really does control a lot that goes on in the market. It's not just some data tools, basically how people determine interest rates. So as this changes, if they start cutting rates, the probabilities of change will be here first. Typically, they're anticipating changes as you go along. See the 18th of September. Let's see what they got. As we pull it up, going into September, if it'll actually pull September, I think it just did. Fed Watch tool is broken. Love it. Maybe it's loading. It's got the little spinny icon. There it is. There it is. Okay. Yeah, I was like, man, that thing is broken. So they are saying its potential in September for a 64% rate. The rate is basically gonna get cut from what its current rate is at 5.25 to 5.5. From there down to 5 and 5.25. There's a 62% chance that's gonna happen. Remember, the Fed said it was gonna make a cut at least once this year. They're anticipating it being in September, and if we go to November, right, we'll see what the anticipation is later. So yeah, in November, it's kind of giving you the same percentage. If it actually changed, there it is. It's basically saying that 5 and 5.25 rate cut is around 50%. So if we don't get it in September, maybe in November, but if they're waiting around to December, that could be very interesting, because at some point in the season, the market does kind of go flat as people try to go into summer. There's not necessarily increased volatility, historical volatility. We might get tools to kind of show you that we might not, but that's kind of historically how it goes. In the summertime, when it's bright outside, people like to get out. People, kind of stop trading and go on sometimes multiple month vacations. So sitting at the desk taking trades is something we'll be doing, but the big boys, the hedge funds, they might not be swishing around their money at around that time. So it's just something to think about during the summer periods in the U.S. If you're seeing slowdown to volatility, that could be why. And we're going to look at some of that now. We're going to get this out of the way here, and we're going to take a look at that exact thing. So if we pull up our VIX here and we just kind of we'll pull up the weeklies. VIX is what I like to use. It's they kind of call it, they nicknamed it the fear index. How likely are people to say, hey, there's potential fear in the market, which markets don't like necessarily volatility or fear. So because of that, it's kind of like the downward pressure index or the fear index. And right now it's relatively low, right? It's at 12. A nice juicy here recently, it's been very, very low. But if you've seen historically during like the biggest woes of like COVID, so to speak, you're looking at like it being as high as 85. So it can get up there, but here recently it's really, really low. Relative to a bullish market, that's what you should expect. And then there's some periods where volatility increases, and then you'll typically see the market in response have a drawdown of sorts. So I guess your last major one was 415. If you go look at SPY and we look at the 415 area, that coincides with a big drop right here. So if you're looking right here, this big candle, that's a 415 candle. Because volatility increased, the VIX increased, it's a fear indication. You're likely to see people, fear monger in the market and woe is me, they're getting out of their positions and running for cover. But that is not necessarily the case. Now, if you look now at the market, we're going to switch to a daily chart here. The market is angsting higher, which is wild. No pullbacks here. If we narrow down on the time frame for XSP, the market pretty much trended sideways, keeping its kind of bullish profile and staying within this range here. I'll mark the range out for you. But why is that important? It's important because in market theory, you can go ahead and set the range and you'll be looking for breaks above and below the range, right? Any break above, if it generates market orders above that range, you can expect for a push higher. If it starts generating multiple market orders below that range, expect for a push lower. Remember, we're not trying to, we don't know what the market's going to do, but the market does leave clues, and having a plan, good or bad, is what we as traders are trying to do. Speaking of plan for traders, right, I want to showcase one of the things of us sticking to our plan. So we had a very, very profitable trade on Qualcomm. We did sell puts, and it did actually go in our favor. We even held it overnight because the trend looked very, very strong on Qualcomm. I'm going to go ahead and open it up here and show you guys why we felt that the trade would definitely continue for Qualcomm. So as we expand this puppy right here, I'm going to show you what I'm seeing and why I felt that Qualcomm had a lot of potential to continue even into the close and even into the open of the next day. So as you can see here, the entry signal was, we were buying on blue and we're selling on red. So we've got a blue down here. That's good for the long-term trend. Check. And then the arrow shows a change in trend on the shorter term. Check. So the trigger to actually execute a trade was back here. We did get in a little bit late, but very similar to the entry. We did like what we saw here. So I felt still kind of comfortable because it was tracking sideways, didn't really push lower. And our stop would have been at this pivot low here, which is the way we have it. But I want you to notice something. In this push, right, you can almost consider this as a pivot high, in this as pivot low, right? So in the pivot high, how does the price action dance around the pivot high? If you've been watching some of our previous videos, we took some we took advantage of some of the opportunities granted by S&B Capital and them sharing with us 5 plays that they like to use. One of those plays is one of the ones I will show you here. So I'm gonna pull it up here, bear with me. But one of their plays was this, and I'm dragging it over now, the second chance scalp. So if you see this range here, then it breaks, retests, and then begins to push. The entry is off the retest. If the entry is off the retest, does Qualcomm rhyme in that same spirit? It does, right? Here is your range. If you make your range bound, let's say it's the top of here, bottom of here, it breaks that and retests right in this area. Right in this area is where it retests. So we're going to box that out there. Boom. It's actually green. Can we make it a different color for you guys? Style, visibility. Let's see. Can we make it a different color? We'll make it. Never mind. Just kidding. I want this. Okay. There we go. I was like, I want that to be a different color. Ooh. Let's make it a little bit accent. Okay. But you guys get the point. So in this box right here, that's where it kind of pulled back and gave you that bounce where your entry would be. So I felt very, very comfortable holding this play. And as you can see, it made a giant push to the upside. This blue line represents the close. Now, why did I feel like, okay, I can hold this little close? And the way it went into the close, right? You get a lot of buying pressure into the close. Felt comfortable with that. And as it turns out, it actually dipped a little bit, pushed higher, and we ended up closing it kind of at market open. So as the market opened, we went on and took it off. It was a phenomenal trade. At least I think it was a phenomenal trade because it was our first big play with the new system. Now, we did take a loss previously before that, but using the system rules, if we go back, This was the initial reward that we would have gotten, and this was the risk. We took a small risk because the trend changed, getting us out earlier and not getting us a full stop out. So that's that's a good thing right there. And the winning trade more than made up for it. Remember, we're using small account strategies to try out this new system to see how it worked, but already starting off to a very, very, very good start. Also, like to say that we on our zero DTE trade, because the market was moving down a little bit, we anticipated it moving down. So I'm going to showcase that here. We actually anticipated the market moving down, and because of that, we took a zero DTE trade to the downside. That actually ended up breaking even. So that's pretty good. We'll take a break even trade. And to do that, we used our Vantage Point. So Vantage Point, for those of you guys who don't know, is another software that we like to use primarily to help us pick direction for zero DTE trades. And it gave us the high of 548, the low of 544. So using that software, 548, and then the low of 544, we went on and took a option strategy of a butterfly trade, being a put butterfly, and we bought that. Now, the way it ended up playing out, if we go to XSP, is there was a brief period where it actually did come down and approached the direction of our butterfly. Now, because it approached the direction and it still had plenty of time on it, we did put a 75% trailing stop on that trade, which it actually sold at break even. So that's pretty good for us because we entered an asymmetrical trade and we didn't take a loss on that trade, which is good, minus commissions. But overall, with that trade closing pretty much at break even, the Qualcomm trade closing at an enormous profit, we definitely netted a profit over the day, and that's really the biggest thing. I really like using systems to kind of automate your trading, and you're not trading off of emotions. That's really what I wanted to get away from, is using the things that we've seen, like the setups from SMB, like the auto trend system, and like Vantage Point, to automate your trading, take your emotions out of it, give you a clear defined rules for entry and exits, follow those, and you'll have a juicy playbook. And then as you hone your skills, you maybe can get off the training wheels, but if it works, right? I think there's a saying that says you can be right or you can make money. You can't do both. And I like developing a clear-cut system so that we can just have a good system to make money. So now we can take a look at, I guess, some of the we'll look at some of the XLK and the XLC to see what's in play moving forward, especially on the daily. So let's pull that up for you guys. Inside the XLK, currently right now, as you can see, things are relatively pretty high, right? So the XLK itself on the weekly is at all-time highs. Microsoft all-time highs. Apple's up there, Nvidia's up there, right? Things are really pushing to the highs. What does that mean for you guys? That means that trading these guys maybe on a smaller time frame is advised, but if you're looking to take a longer term position on XLK, like a 3-week swing, probably not the best advice. And let me explain why. I'll open this bad boy up and kind of explain it to you. So as you can see, yeah, we've got the weekly chart pulled up for the XLK. But if we go and pull on over to here and we put the XLK into it, now this is also a weekly chart, right? Where it is currently, this is the day and this is the week, right? On the weekly chart, this red line represents 3 ATR. Typically, stocks don't necessarily hang out in their 3 ATR average true range. They can hang out there, but they're not expected to for very long periods of time, historically, right? Now, you do get some cases where there's like a Super Bowl run. I mean, I'm pretty sure looking over here, it pretty much hung out there for quite a long time. That could be the start, but your reality is the better position to get in is kind of at the moving average and get the expansion away. And as it closes to the moving average, the next opportunity to take a buy is there. One thing that catches a lot of traders off guard is that fear of missing out. You can hear about your friends potentially making certain plays and catching a huge windfall, but what happens is you don't want to be that guy late to the party when everybody's leaving and you're there holding the bag, right? You don't want that. So buying long-term plays might not be necessarily advised, but let's say, for example, you could come over here and take that same play over here on this side. So let's say, for example, you see the trend set up here. Let's say we'll use NVO for this, and we'll put the XLK there. Boom. So, oops. If I can type better than slow. Cool. So you got the XLK here, right? And we'll maximize it for you guys. If you notice, the XLK is blue and it's double blue. But let's see when we had a trend change. Let's go back. It might be a while. Definitely here. Okay, awesome. So your change in trend, right? Double blues, you're getting chopped up around here. Now there is rules in chop on what to take and what not to take, right? But in this case, let's say, for example, you took all this, you're at basically break even for all of these, and then you take all the trades and you execute this one, right? This trade happens on Tuesday, the 11th of June. So if we come over here on the day chart, on the XLK, and we do Tuesday, 11th of June. June the 11th, boom. This is about where you're getting in that play. And so even in the system that we have, even though it's on a shorter time frame, even if it's like a 3-minute time frame and you're getting chopped up, the one play that let's say you could stay in for an extended period of time, if you did get in on the 11th or the 10th of June, right? Probably right here, you're catching this huge play, then the next day's play and the next day's play, and it's not even telling you to get out yet. So you would have caught this entire move and been in this entire move for that period. That's why it's not necessarily good to chase, because you would rather be in down here, and with the right tools and the right systems, you'll get in at the right time. Systems are there for a reason. So there hasn't been a trigger to execute the trade since that trigger. And we'll go back and we'll take a peek at that, because I caution people from just winging it alone and getting in things because their friend told them to. And don't worry, guys, that used to be me. And a lot of guys that I traded with, that used to be them. Hey, take a look at this. Hey, if I had invested in this back in the day, I would be up. Maybe I should get into it now. I advise against that. You need to come up with a real strategy, a real plan. Find out what actually works and what doesn't work, especially for your risk tolerance, and make a system around that. This right here did not give another trigger to basically get in. The auto trend system did its job. It told you, hey, stay. This is still an uptrend, still an uptrend, still an uptrend. And there's not been a trigger. But if you took the trigger and it was on your watch list, you'd be like, yo, this is amazing. I'm up. It's going neutral right now for today. Maybe it can go and move higher tomorrow, or even give you a trigger to get in for the best opportunity at the best price. So I would definitely say be patient as a trader, especially if you're a new trader. You definitely need to develop patience and waiting for your setups. What helps, I've heard other guys say what helps them is if they have like a checklist right by their screen, but that's all the auto trader system is for us, is a checklist. It's blue, buy blue, buy blue, buy blue, sell red, and then if it breaks a low, sell red. So there you go. Very, very simple. Very, very, I would say so far, very good. 3 trades in, and we love it already. So coming back to the charts here, if we go back and take a look at the XLK here, it is at highs. But let's say, for example, right, what other outperformers would you be looking to put on your watch list for a potential trade on a shorter time frame? Obviously, you have NVIDIA, you have Apple, Microsoft. Those are going to be the outperformers on the shorter time frame. You like the name brand names with the higher volatility. Keep in mind though that with higher volatility in name brands, it does tend to move. So just be cognizant of that. We'll also take a picture. We'll take a look at the XLC in your big movers there. We have decided to we like trading Meta, right? Definitely outperformer. Honorable mention, definitely Google in the same category. It was kind of a toss up. We just didn't like how it was triggering on the auto trend system, so Meta seemed a little easier there to follow. Another honorable mention is by far Netflix. Netflix isn't going anywhere in the streaming wars right now. Disney is hurting. They've acquired a lot of like brands like National Geographic, Star Wars, to name a few. But Netflix has been consistent with providing pretty cost-effective content, and they have a lot of it. So if you're not really into niche, right, Netflix is perfect. And so if we go, maybe we could take a look at Disney and look at it in comparison. Oh, it's right here. So Disney, in comparison to Netflix, is absolutely getting hammered. Right now, Disney has parks and they have the streaming service, and they are absolutely getting thrashed. So it's looking like Disney is setting up for a potentially weekly trigger sell. Now, selling the rally, you probably could have took the short signal right here because it actually broke trend right there, believe it or not. So once it rotated down into this area, right, taking this short actually wouldn't have been a bad idea. Now I could see what happened here. If you took the short, you wouldn't have got stopped out if you took pivot high. But for us, we would have taken it off if it gave a buy trigger. And in that regard, it did break the previous day's high, or excuse me, previous week's high. Therefore, giving it the buy trigger would have got stopped out. But the follow through to the downside was pretty intense, to say the least. So, yeah, Disney's kind of hurting. But the Netflix is streaming along fine. So they're definitely approaching highs here. And if they can break those highs, I would look at it from a perspective of what's the setup. Is the setup break? You take the break, or should you wait for potentially the break and the retest? If you look back to previous highs, again, past performance doesn't necessarily guarantee future results. But here, when it was at highs, it broke, made a new rotational high, then retested this level. So you could almost say, okay, I'll take a play at this level pursuant to SMB's setup, second chance. But it's going to be a tight stop loss. So once we see it start pushing out of here, stop loss if it gets into this rotational zone. If peekaboos down there, there's your risk and there's your reward. And pushing to the reward, shout out to SMB and shout out to their system there. Same thing here. It breaks, retests, and then you can necessarily take the buy with a very tight risk there. It actually gives you a nice rotational short-term reward. They're very similar thing to the downside. Breaks, retests, and then fails. So it's just something to think about, man. The system is very simple. It works. And we like that firms, and there's so many tools, there's so many indicators. You guys just find something that works for you and like research what your risk, what your reward would look like, how you like to set it up. Research what you should do in small accounts, how you should scale, what your trader psychology needs to be, and just find a system that works for you. I know for me and Q, it was, for me personally, like 2 years of like looking at the markets, reading certain books on the subject, taking seminars upon seminars, learning. The last book I just read was Up Close and All In by John Mack, former CEO of Morgan Stanley, about what happened during the 2008 financial crisis. And just learning about what's happening on the floor gives you an insight on how hedge funds think and what they're going through. Just something to have in your tool belt to just know. So you guys, I really appreciate your time. If you've been liking the content, please feel free to subscribe, hit the like button. We're going to keep doing this because we love to do it. It's basically like our vlog, to ourselves, but we like sharing with you guys because we do want to give people hope that they can do it too. And with the rallies in the markets, there's opportunities out there. Definitely still look at the underperforming sectors. Like for example, I'll bring it back up here briefly again. You can look at, we've been looking at the XLK pretty hard. And as you notice, the XLK is the gray one. Real estate really is not necessarily at the bottom. What is at the bottom currently? I believe it's materials. The materials, let's go to the bottom. Let's see. What's that purple? What's that purple? Not financials. Is it consumer stable? It's like, you see what I'm talking about right here? This purple. Which one is that? It's like a rich purple, but it's not that though. So weird. I don't even see it. It doesn't even look. It might be materials. Nope. Consumer staples. Nope. We got a phantom purple on here, guys. Or is it like utility? Is it like a blue? It is. Okay. So utility. Utilities is actually now at the bottom of the barrel. And we see the XLRE kind of ticking up. That could be a sign that real estate could be on the increase, at least for the REITs and the ETFs. So if we go look at the XLRE, which is the real estate ETF. Let me not use this one. Let me go over here. You see right now it's in kind of a choppy trend, but it is gaining momentum. This is on the day chart. So necessarily I would be looking more for a weekly trigger. You did get that here, but it's since pulled back. So if you're taking, let's say, necessarily this weekly trigger, it's above the 8-period moving average and above the previous week, right? Your stop would be below the 8-period moving average and below the previous week. You can almost take this entry. It'd be a little late, but you could take it. And below here. Now, I wouldn't advise taking it out the gate. Why? Because your weekly unbalanced volume hasn't necessarily developed into a buy. What is unbalanced volume? Unbalanced volume is price and volume above average. Typically, when price and volume are above average, you continue to see highs. If price and volume are below average, that's a recipe, not necessarily a guarantee for lows, right? There's less participation on that certain stock or ETF, REIT, whatever, and that is kind of showcases it's a recipe for lower lows. So I would want to see, and almost you could put an alert for the unbalanced volume to go green before you actually take that trade. So we're really excited for REITs and the XLRE all the whole, because you know what they say: buy low, sell high, or buy the dip, short the rally. And because this is relatively in neutral territory, and it's been for a while, it's a good opportunity to get in on some of it. Now, that doesn't mean buy it blindly. You can have a certain risk profile. Let's say if it breaks low, you can cut your losses. If it breaks this rotation, you can cut your losses. That's one way to think about it. But if it gets down here again, it could be potential for a buy. But if you start seeing unbalanced volume come into the picture, that could be a recipe definitely to not wait, because price and volume are above average. Could be follow through if that trend continues. So guys, I really appreciate you guys joining us. This is your boy MC Fire coming at you again with another Fireside Chats. We are definitely trading into hopefully into the end of this year, and hopefully we get funded. That's kind of the goal. So appreciate you guys. Have a good day and goodbye.